This video is to explain the biggest change from the April 2024 budget that, if everything goes according to the plan of the government, comes into effect on June 25th. This is relating to the taxation of capital gains. At the moment, if we have a capital gain, the tax rate is effectively 25%, but it's done in a kind of a confusing way. So if you're looking at the example on our screen, we have a asset that we bought for $200. I try to keep these numbers small and keep it easy for all of us. That maybe is now worth $300. When we sell that, at the moment, we only add 50% of that gain to our income. So $100 capital gain, $50 gets added to our income. If we assume a 53% tax rate, which is the top tax rate in Ontario, that's a $26 tax bill. That is true whether that's an individual making a capital gain or a corporation making a capital gain. This is what is about to change with the new budget. The new budget is looking to change this number here, the amount of the capital gain that gets included in income. So if we flip over here, here's the old way. This is the way the rules exist as of today. This column shows what are the new rules with some exceptions, which we'll cover. So if we are subject to the new rules, now we have the same $100 capital gain, but instead of half of it being taxable, 2/3 of it are taxable. So what that means is now we're going to add, instead of $50 at 53%, we're going to have $60, $67 at 53%. So the tax owing on that same gain is going to go from $26 to $35, or an extra $9 in tax. There are a couple of exceptions to this. So for individuals, people, the first $250,000 of capital gains in any calendar year, you're going to get this every year, are still subject to the old rules. So if you have a stock portfolio with some modest gains, 10, 20, 30, 40, $50,000 a year, nothing's going to change. If you're an individual and your capital gains in any calendar year go over $250,000, the excess is now going to be subject to these rules. So think, I've had a rental property for 10 or 20 years that I own personally, or the family cottage that is going to have a taxable impact to it. Those are going to be subject to the new rules. Currently, the announcements do not include any kind of rollover provision of, if I didn't use some of my 250 from last year, can I carry it forward or anything like that. That is not in the legislation as it exists right now. Additionally, a corporation is not going to get $250,000 as the old rules. Every dollar of capital gains inside a corporation is going to be subject to these new rules. One of the most common questions we've gotten from a lot of clients is, should I sell all of my stock, convert it to cash now at the old rate, the 26% tax rate, and then just turn around and rebuy the same investments, but lock in the old tax bill? We've done some math, we've talked to some of our friends in the investment world. And so if you were to do that, what would happen is you would sell your $300 worth of stock today, you'd have $273 left over to rebuy the same investment. Because the total investment you own is smaller than if you did nothing, the break-even point would be about 7 years from now. As in, like, if you were planning to hold this investment, this rental property, this stock, whatever the investment is, if you're going to hold it for 7 years or more, could be 6 if you're expecting a faster investment return. So 6 or 7 years, you're actually better off to do nothing, keep all of your $300 rather than send 26 of it to the government, and then just suck up paying the higher tax bill 7, 8 years, 9, 10 years from now. It is not the sexiest tax advice of do nothing and just accept a higher tax bill, but that's how the math works out. So if you're not intending on doing anything anytime soon, not selling your investments and just accepting that the tax rate could be higher down the road might be the right answer. If you have something where you're like, I was intending to sell in the next 2 or 3 years, give us a call, send us an email. Maybe there's something we should do. If you have, so the other downside to this is that these new rules are not retroactive on the gains starting today. If you've owned a piece of property in your business for the last 10, 20 years, the new tax rates kick in on all of the gains starting from 20 years ago until today. There's not an opportunity to say, this is the gain from 20 years ago until today. I want to lock that in at my 26% tax rate, and then we're only going to pay the higher rate of tax on the new stuff. That's not in the law. There are some things we could do if you think that I might be selling this property in the next year or two, and it would be a shame to pay 9% extra tax on 20 years worth of appreciation. So if you're in the spot where you've got a big corporate asset you're thinking of selling in the next couple of years, and you either have or could access the ability to pay that tax on your next tax return, give us a call, send us a note. There's potentially some things we can do between now and June 25th to kind of lock in that tax savings and save you, depending on the size, hundreds of thousands of dollars. So that's where we're at. If we're going to keep these things for the long run, the tax advice is do nothing. If we think we're selling in the near term, give us a call. What is uncertain is that this tax law is not yet written in legislation. And the last 3 major tax changes have all been deferred, delayed, or drastically changed from what was originally announced. So if you don't have a big corporate asset, but you still don't like how that you're going to sell soon, but you don't like how this tax law is set out, my advice is to write your MP. In 2017, when the rules on investment income and the ability to allocate income to other family members changed drastically, there was such an uproar and such a negative feedback to the members of parliament that what law actually got instituted was drastically different than what was announced a few months in advance. I actually met with the MP here in Burlington personally back in 2017 on that tax law, and have already written her on this one. So I don't think it's a waste of time to reach out to your member of parliament and let them know how negatively impacting or how negative this new tax change will impact you. If you have any questions on this or anything else, don't hesitate to reach out and ask. As always, we're here to help you grow a bigger, brighter future, even in spite of really negative, nasty tax changes.